Where are all my friends? Joe DiSanto, round 2. My dude, how are you?
Good, man. How's it going, Andrew? How's
It's
Los
actually-
Angeles?
It's
My
been
old home.
I know. It's been really good. It's funny, weird to do a satellite episode. I've been able to do so many in person again, but
You've been sitting down with people like in a room together,
I know, you'll never
talking at
believe
each
it.
other.
What a wild concept. I think about how
is.
many podcasts were born out of necessity during the pandemic and how they're all just digital like this. And it's like, it's cool. But even you and I, like when we do get to hang in Florida, it's just like, it's a vibe. But
It's super fun.
so in getting to this episode, it's funny because I think about how to explain who you are and what you do. And it's like, are you like financial independence guru? Are you like, obviously like personal finance, but just finance in general? That's a thing that you have definitely mastered. However, you come from a career in Los Angeles that was entirely different. And this was like, it almost started as a hobby where you've just continued to grow and master, basically like retired and then like went all in on this. Like for anybody that missed your first episode, can you explain like who you are and what you do currently?
Yeah. I guess I am like a financial independence guru. I like that. So what I do now, like I used to, as you said, I lived in I lived in Los Angeles. I owned production and post-production companies. They're still there. They're still going. My former partners are still rocking it, doing well. We had a kid. We wanted more family time and all that. And I think I was burnt out for sure too. So I was like, we had done pretty good. And I was like, what if we like try to, I don't know, work less, like we just get out of the businesses. Maybe we move somewhere cheaper. You know what I mean? Like we just figure out like, can we just work less and just like hang out more and not be stressed all the time? Because I was like, in terms of the dad stuff, like I really get into the work and I love my businesses, but I like take on a lot of stress and I can't go home and like just be like this fun guy all of a sudden. I'm like, I used to go to the bar and de-stress with a bunch of cocktails, and then I was a really fun guy, but you can't go do that with the kids. So I was looking for something more mellow. And luckily, we had done our personal finance, financial prudency, investing and everything. And it worked out pretty good. And we were like, I think we could kind of like do what we call like a downshift where maybe I just work part-time and we have money from our investments and income and things like that. We pulled the trigger on it and we moved to Florida, which is totally random. We moved to the town you grew up in.
Yeah, we
and
switched.
Us knowing each other is so damn random. A story of SEO. I feel like you found my website.
Dude, it's so funny. Like I still, every time we hang out, every time we talk, like I legitimately feel like I've made a friend. But it was for a listener that doesn't know, it was me trying to kind of up my not even financial game, but like my learning how to do a business properly. Because that was the thing of like I had always kind of practiced like personal finance and good practices. But then I got to the spot where I had to make an LLC. And I was like, I don't know how the fuck to do this. And it was, especially in California, it was so daunting and so much red tape. So I was just Googling and I found your blog, Play Louder. And I was like, oh, this dude like gets it. Like I could tell it was written by somebody who was well educated, but also I guess like had a sense of humor or like had a sense of like compassion for like the regular folk. And you broke it down really well. And I was like, this is sick. And I straight sent you a cold email. I was just like, hey man, I really liked this article that you wrote. I'd love to talk to you more. Also, I see you're in Dunedin. Is that proper? Because like Dunedin is a very small town in Florida. Like nobody's there.
So
and
random.
Then we have this moment where it's like, wait, yeah, I'm in Dunedin, which is like a street over from where I grew up. And then I'm now in Hollywood, which is where you built your whole business and spent the whole your young adult life and put your roots. Funny. So it's been really
and
cool
now when you come home for Christmas, like you call me and we go have a beer.
Yeah, it's fucking cool. It's super cool. And that's kind of why I wanted to do this episode is like you understand two sides of like typically what are very polarized or different minds of like, the creatives. You worked like your therapy, right? Which would be a production studio.
Therapy studio, yep.
Which is rad. Like I've gone and met them. Like I've gone and seen it. It's beautiful.
Yeah, they're real. It's
so
real.
Oh, I mean, it's so legit too. It's like real Hollywood productions. It's not like, oh yeah, this guy like randomly did this thing. Like, no, you like did it. I've seen that.
Thanks,
you
man.
worked with those creatives. You've been there. You built something that I truly admire and respect. But then you also have this side that like typically to some people would maybe be a little bit more boring. And it's a lot more like bookkeeping, accounting, personal finance, logistics, like oftentimes what a lot of creatives hate. So I think your understanding and love for both is something that I really love. And it's why I kind of wanted to have you back, because when you can share knowledge on both of those topics, I think it hits a little bit different than just like the random personal finance guru. It's like, I can't relate to you at all. Like you're obnoxious.
Yeah.
So
thank you. I appreciate it. Yeah, it is weird. I was a photography major in college, ironically, but I always loved business and I always liked finance and investing. Like I found investing kind of exciting. The personal finance thing, which is like financial prudence or whatever you call it, which is basically doing your bookkeeping. You know what I mean? It's just like keeping track of your shit and like making sure you don't spend more than you make, the basics. But that's not that exciting. But I just started doing it because I wasn't making much money and I was like going into debt and I was like, man, I got to keep track of this stuff. You know, I just felt out of control at that time, which is late college, you know. And I originally I read some books on it. I was like, oh, and people are like, you got to write it down, write it down in a notebook. And then like, I was like, okay. And I did that for a while, but I kept like at the end of the week, I'd have to like add it all up, like with a calculator.
Like
and I'm like
balancing your books, I'm like old school checkbook vibes.
Like there's got to be a computerized way to do this, and there was. It was called Quicken. But I started doing it, and like it just turned out it's something that I don't know, weirdly enjoy. It's like, I like creativity, and I think I'm a creative person. Ultimately, I found like once I got to New York and then to LA, like while I enjoyed creativity, I was like pretty talented, I was not as talented as I needed to be to compete at the level like of other folks. Like, for me to like sit down and do a design and, I can produce like a good idea, like a week, and then I see like dudes that can produce and women that can produce like great idea after great idea after great idea, like day in and day out. And you're just like this wellspring of like awesomeness.
Yeah,
and I was like, I just don't think I've got it to compete like as an artist, but I also was like, noticing I was my business interests, were coming into play, and producing seemed like something I could do. And I'm like, I'm really good with the finance, as it turns out. Like I taught myself how to be good at finances using Quicken randomly, and it happened to be just something I liked because it's like calming for me. Like it's money, it's everything's got a, legit answer. Like, it's wrong or right. So it's kind of like nice. It's not nebulous.
True. Like in a creative world, it's not nebulous. In a creative world, it's like you have black and white answers of like, you have very specific numbers and it kind of becomes this basic math. And I feel you. It's like strangely calming to like balance it out or to keep track
like therapeutic or something for me. So
it's weird.
I feel like I'm lucky because not a lot of people obviously are going to say that. They're going to mostly find it annoying. That's by and large what I see is people just find it annoying. Yeah, I ended up like basically becoming more of the business person, producer type. And I realized that was really where I was supposed to be. I was supposed to be the business side of a creative business, because it's like I could use my creativity and that could be part of what I did. But I also could like master the marketing, the branding, the money, the relationship with clients, project management. I was really good at managing artists because I was a photography major and knew how to do After Effects and knew how to do Photoshop. Like I could speak their language,
Yes.
And that's the road I ended up going.
You said something there that's really important though, is like you said like for you, it was very calming and good, but for many it's boring or daunting and it's not it. But I think the reason that, again, I'm happy to have you on is it is a lot less daunting when you break it down and understand fundamentals. And I think you've always done a very good job of that. So on this episode, like we already did your first episode, like we've told your story and you shared that so well. So I kind of wanted to come into this one. I had a couple topics that I wanted to like specifically tackle with you. The first one is maybe why it can feel daunting, and speaking from myself, like early 30s and maybe as a proxy listener, it's like, you're somewhere in your 20s or your 30s. You want to take it seriously. You want to learn. You want to grow. But there's so fucking much to keep up with. And it's also just a challenge in itself in a big city or anywhere to like pay rent and survive. So I think about that person that's listening to this and it's like, cool, great. Like must be nice to have rental properties and to have all these pillars of financial freedom and set up all this financial independence. But like, where do you start?
I do think that people's first real investment should be a home.
Wow.
That's just hard. It is hard in LA, I realize, in places like New York or LA or whatever, because stuff is so expensive, you know?
Yeah.
But I've done the math on renting versus owning, you know, in the long run. And you just do so much better owning the place that you live in the long run. And honestly, even though getting into real estate in LA is such a tough thing, like if you can do it, it usually pays off like ridiculously awesome. You know what I mean?
Like
in the long run.
Higher difficulty and risk comes a higher reward and yield.
Higher reward, exactly. That's really challenging. But to have $1,000 to $5,000, you know, it could seem like, oh man, I am really far away. And you know, probably yes, you are. You're farish away. But you can get into properties like if you're a first time buyer, you can get in as low as 3.5% down using FHA mortgages, which is basically like a government program that fosters home ownership for citizens and basically helps you to get into loans or get into a property with less down payment. So if you're going to try to buy a condo maybe for $500,000.
Well, let's be real. I was just looking at Zillow. I think the base level in LA right now of like modest condo is 700.
Yeah? Oof,
yeah.
Man.
100%.
It has got... Since we left 2008, I thought COVID actually prices would come down, but it was just crazy. I mean, it just went bananas.
Legitimately, dude, I was looking at Zillow last night. And this is a great conversation. I love this because I am of that mindset and I have not been able to do that yet. So I can speak not only as a proxy listener, but myself. But I saw legitimately a lot of land, just a lot of dirt for $550,000. The like 1 to 2 bedroom condo that looks like your first starter apartment in anywhere, like not even like a crazy nice area, but like in actual Los Angeles, 700 is a deal of a lifetime, probably closer to 8. So then what is that?
That is tough. I mean, it just makes it hard. But if you think like, let's say 3.5% of that is $25,000.
Yep.
So it's not totally unachievable. You know what I mean? You could also, you know, first time you're buying is maybe buy with a friend. I know that comes with its own issues, but it's like it's not uncommon to share a rental, right? You know, with a friend. I mean, obviously you can sort of maybe get out of that a little bit easier, but if you have enough of a trusted friend or, you know, whomever, you could go in and split a 2-bedroom. Like that might be a way. And then eventually you move out and you rent half it, whatever. You know, your goal is, I think, get into a starter thing and then build your real estate by renting that out and then moving on and buying something else. That's what I did. I mean, it was tough for me to get I bought my first place in LA. It was $460,000 and I got in for 5% down and I just managed to make it happen. But I focused all my savings towards that. When you're saving for the house, you want the money to be there, you know, when the time comes. And if you take that savings and invest it in the market, it might not be there like right when you need it. You know, you might end up having more, frankly, if you get lucky when you need it and you make a profit. But the market is very volatile. That said, the market is down significantly right now. Like this is a good time, honestly, to take the bet. If you're like, I want to buy a house, I've got $5,000, I'm not ready. What should I do with the $5,000? This is a good time to make a bet that if you put that money in the market, it would actually be worth more in 2 years. Not that I'm a licensed financial advisor. I'm not even a CPA lawyer, but you know, I would invest your money now if you have it in cash, probably in the market.
So you gave me a wild card answer that I actually love, and I'm glad you said it, because to me, the idea of living in a city like this and being able to buy a house is just like absolutely foreign. So just you saying there are programs available where you can put 3.5% down, and breaking that down, taking $700,000 and being like, yeah, $25,000. Like all of a sudden a number that sounds absolutely absurd of like, I can't buy you would kind of think about like buying that cash and you're like, never. And then you hear that and it's like, okay, like the person that has $1,000 to $5,000 set aside, like that's still too far away. But when you actually think of it, it's like, okay, well, no, but that's maybe a little more attainable than you think. And that's encouraging advice. I like that.
And then if you're like, all right, a 1-bedroom 700, maybe a 2-bedroom's 9, but I can go in partners with someone on that. Now I'm in for 450 times 3%. I only need 15 grand potentially.
Right. Yeah. So I love just you saying that, and like looking at real estate in a little bit more of an open-minded, creative way is cool to me, because I think we could both agree that most every successful person, or I guess you could say people that have accomplished financial independence, probably have some amount of their portfolio in real estate.
Yes.
So getting 100%. Started early seems like a good thing.
Before you think it's possible, you have to commit to it in your mind, and if it takes 2 or 3 years, that's okay. But like, you have to be planning, you know what I mean? You have to be like, I'm laser focused on buying property. I know it's good for me. I know it's what I need to do. So I'm going to like focus my savings plan towards that.
That's really beautiful.
What I'm doing.
I like that a lot. And I'm glad you shared that, because legit for me, it's a crazy reminder of like, oh no, like maybe that is a little closer than you think. And then all of a sudden every month, instead of paying your rent and not having any, like, there's nothing at the end of that. Whereas a house, you're giving yourself shelter and you're kind of leaning into an investment. So that's cool. I remember a friend's dad gave me, like, he just like basically told me, I think at the time it was early 2010s. And I think he said to expect 7% return. And he's like, I know it doesn't seem like a lot, but like throw $1,000 into that and like kind of just watch it. And, you watch it turn to like 1,100 and you're like, oh my God. And it's not life changing. But the thing that I hear a lot of people talk about, which is cool, is like with an IRA, like a Roth IRA or something like that. Like I think at 25 years old, if you were to put 5 into it for 5 years, that's like 25 grand. And then if you were to let that compound, by the time you could pull it out at like 65, compound interest at that rate projects you out to be more than a millionaire. And that's another like one of those like encouraging ones to me. In both of those examples, it's pretty cool to realize that just by being young and getting over that little first hump, that money ends up being crazy leverage years later. And that's pretty exciting. That when that concept clicked for me, that like what I considered that like wealthy, successful people would consider peanuts, it was like, oh no, like just getting over that hump and that little bit to get started is monumental, especially using young age as leverage.
Yeah, youth is honestly your greatest asset in building wealth and, what eventually be either your financial freedom, nest egg, or retirement nest egg. I mean, you cannot get that time back. That compounding time is like really, really important. But, I admit when you're young, you're also making the least amount of money. You know what I mean? You're trying to get your footing. So it is a hard time. It's like, it's difficult. I admit that, well, I always say people need to treat their personal financial life like a business. What I mean by that is, on the basic level, it's like, you got to do your bookkeeping for your business. You got to know if your business is making money, but you also, when you have a business, you have a plan to make money. Right. And you model that out, you put that on paper, and you try to live up to that plan. And then you adjust for that plan along the way. And you need to do that in your life as well. Like you can't just take what comes to you in terms of your job and the money you make and all that sort of stuff. You have to take the bull by the horns. And you have to look at like, all right, for the things I like to do, where can I make the most money? What kind of place should I be at? Where should I be looking to get a job at? Like, should I work freelance? Should I not? Can I make more money that way? Like if I decide to do a freelance thing, maybe I could actually make more money because I'll save a lot in taxes because I'll be a business. You really need to like take your life and your future seriously and go on serious offense when you're young. As you get older, I feel like defense starts to get a little bit more important. But when you're young, it's like offense, offense, offense. Like the best defense is a good offense. So it's like you have to be strategic about like, how am I going to get my income up there? Am I going to do lateral moves? I have to go ask for raises every year. I have to get in people's face. But I also can't be that person that goes and asks for a raise just because I've been there another year, but really my performance was like mediocre. You have to make yourself so damn valuable at the place that you work that the prospect of them losing you frightens the ownership so much that they will give you a 20% raise to keep you around. Like,
that's cool.
You have to be mega aggressive about making money. The truth be told, it does not make itself. It will never just come because you're older. It won't just show up because you've stayed at the place long enough. Like, so that's the biggest solution to like getting into that house. That's that solves a lot of money problems. It's just making more money. Life shouldn't be all about making money, but it is a requirement. You know what I mean?
Well, I always come back to, I always say it's like happiness, or it's survival then happiness. So it's like, first figure out survival. Like before you talk about any of this, like you got to survive. Like you got to just have a roof over your head. You got to eat. You got to take care of yourself, your basic needs. But then past that, the more you can succeed, the more happiness that can afford. So it's like, that's where you start to think about taking it seriously, is like you can shorten the amount of time that you have to work for somebody else, and you can set up a much happier life, or give yourself much more freedom to do the things that make you happy if you take that seriously. And then you start to value that more, and you start like think about how valuable your time is. And it's like, oh shit, maybe I should pay attention now more than ever. Like it all does feel so daunting. And every time you and I talk on an episode or just in person, it's like to cover the whole topic, to cover all of it in an hour, 30 minutes, or any amount of time, it's like, it's impossible. Like there's just so much. But the thing that I find encouraging is like, now more than ever, you can have a very basic, simple question, and then you can just search it and you can start reading like little bits. Like there are so many rad resources available for you to gather your own information on the topic and like kind of sift out like the BS that you don't agree with, and find like, for me, I happen to align with a lot of the things that you wrote about on the blog. So I was like, oh, cool. Like I'll just talk to you more and read more. And like, are you and I going to align 100% on everything? No, probably not. But like, we can learn a lot from each other. So I think that that's also really cool of when it stops being this whole daunting thing, and it can just be like where your curiosity is piqued, read a little bit more, I think is so valuable. And the more I can encourage anybody to do that early, the more I'm just like, yo, like, you'll be good. And I can't speak of like, I'm not there yet. Like I'm purely, I am a student of all of this,
Well, you have to get educated before you can make the right moves, to advance yourself. You have to know what you're doing. Shameless plug. I mean, you can get a lot of that information from my website, playlouder.com. I mean, that's what I kind of write about there. And that's how you found me.
It's funny. Like I think about that, and I think about like now you're at a different spot in your life. You had the first career, you made your money, you did your thing, you retired. Awesome. Clearly you were passionate about this. Like you didn't have to go and do the website, but it was something that you were passionate about. And now here you are at this different phase in your life where it was almost about to be retirement. And then you kind of found this thing where you just care enough about this where you made Play Louder. And that's like not a simple undertaking. Like the amount of content that you put out, you're here doing this podcast on a weekend, like you put time and effort into it.
Yeah.
But another thing that I find encouraging for when you master your craft is now you like made a whole course out of it. Like you started, and like there's tons that you can learn just free on the blog, but then you took it a step further and you like made courses, which I love digital assets. I love things where people can make money by making something once and then it just exists.
Yeah.
So you made your own
email box money. In the biz, we call it mailbox money, like, cause my wife actually did some VO along the way too. And she'd do a VO gig. And if it was union, man, we'd get checks for like a year. They just show up in the mailbox,
That's crazy.
And we'd be like every now and then we'd like get the mail. We'd be like, mailbox money.
God, what a feeling. And if you're in music, you get that check and it's 39 cents.
Yeah, I know. Unfortunately, like the powers that be have been working towards getting rid of mailbox money for many years now. But I'm like, I think I want to try to get email box money where like I just keep getting an email dings like, you sold that, you sold that, you sold that. I switched to like what I call like a semi-retirement where I knew I was going to work, but my goal is to work part-time. And then we had some income from investments and all that. And it's funny, I was like, it happened naturally, but this fun, this thing that was always a hobby that ended up serving me well in actual business and all that ends up being the thing that is the part-time work. People just started asking me, like, it started with my own business and then friends' businesses, like, hey man, we need someone to help us manage money. We can't afford a full-time person because, if one of the partners was not a business person, which is often the case, there's no one like minding the till. Mm-hmm. And so they're like, will you do that for us? And we'll just like pay you like a monthly thing. And that's kind of started my part-time work. But these folks, their businesses, they can afford to pay me a certain amount of money every month, have me on retainer and do this work and advise them and give them analysis. But the average person is not going to be able to do that, but they need this knowledge. So I was like, I got to package up, I'm giving pretty much, you could get all the information if you read everything on my website, but I'm like, I'm going to package up like the right, most distilled info in a good order. Mm-hmm. Obviously, each of my courses has me on video and showing you things. And I actually give some spreadsheets that I made that I use for myself in my own planning, much like you were talking about earlier about compounding and like doing a calculator and being, oh man, if I had like 5,000 today and it grew like this, wow, I'd have a lot of money. That's kind of good. So I have some more advanced type of like spreadsheets in my little course that show you like, okay, I need to save this much of my income, but what if my income grows like 5% a year? What if like that's one of my goals? And I keep saving the same percentage. And then I get into investing and I know maybe I'm going to make the 7%, but what if I can make 10%? Like how much does that advance my cause? God, I wouldn't need to save nearly as much. You know what I mean? Like how can I get 15%? And then you're like, all right, now I'm going to do some research on like, what are ways to get 15%, and there's no guarantees in investing, obviously, but I find that real estate, and part of the reason I say to people, I think their house should be their first investment is I think real estate provides a superior return for less risk than the stock market. Wow. So that's why I say to people, like, your first investment really should be your home. And a lot of times, like, just someone's home ends up being their whole nest egg 30 years from now. You know what I mean? Like, right. And they're like, thank God I bought the house because I didn't end up actually saving that much cash after like put the kids through college and all that. But that house, ends up being the linchpin of like how they can retire. Wow. But it's a real estate investment like any other, and real estate performs well. And I think, relative to the stock market is far less volatile in the long run. So there are also other ways to do real estate, like real estate syndications, and often you can find returns there between, 10 and 20%. Again, no guarantees. Everything comes with risk, but the stock market is very risky too. You know what I mean?
When you say real estate syndication, are you talking about like a collective fund? So like if there was a property for $10 million, like some commercial property or something like that, people can put a smaller amount in and do like a group investment? Yeah,
basically a syndicator is like manages a real estate investment and they collect funds from investors to finance the investment. Mm-hmm. The thing about real estate syndication is, at least historically, oftentimes you have to be what's called a accredited investor to invest in real estate syndications, which means you have to have a fairly high net worth. Yeah. However, things like Fundrise and crowdfunding sites have broken that barrier down, and you can get into a real estate syndication through like Fundrise or CrowdStreet or whatever, and only put $5,000 in.
Have you tried Fundrise? As soon as you were saying that, I was thinking of them, and I've never personally tried it, but it looked really interesting.
I think it's really cool. I haven't done it because I'm in some syndications, but I just went into the syndications with the syndicator directly. So no, I haven't personally done Fundrise, but I know a lot of people that have, and I mean, it was quite democratizing. It really brought a lot of different types of investments to the table for you. Because the truth of the matter is the S&P 500 is kind of like the benchmark of it for investing and investment advisors, right? So everyone's probably heard like, over the last 100 years, the S&P 500 has like an average annual return of 10% when you reinvest dividends. And that's basically true, right? So when you go talk to a financial advisor, and you would say, you sit down and be like, hey, I'm going to give you my money. Like, how much return can I expect? And they're like, well, on the high side, like the S&P would give you like 10% in the long run if you solely invested in that. Historically, we don't advise doing exactly that. We like a mix usually of, stocks and bonds. So our target is like 6 to 10%. And if they get 7%, they're feeling pretty good about themselves. They'll pat themselves on the back. When you do the math, when you do in those calculators, right? You put 7% in versus, or you put 15% in versus 7%, your money compounds to a 4 times greater amount with the 15% in the same time frame. Like getting more return really makes you get a lot more money.
When you start, you start to think about compounding returns and you're like, fuck, every single one of those percentages, like
every time point, I pump it up like, 1 point, like I end up with way more money after 30 years. You're like, so then you're like, I gotta figure out how to get 20%, The real estate, my real estate over the years, and I owned about 16 properties in total. I don't own them all now, but over time, I did a calculation, which was like my best, like average calculation, but also adjusted for like the time I was in each property and like the initial investment I made, like I tried to like get this fairest average I could. And it was like 40% compound annual growth.
Damn.
For real estate, and I'm not saying like I'm a genius. Like I was a beneficiary of a real estate bull market. And I also owned 2 houses in Los Angeles, which did well. Yeah. And 2 commercial buildings, which did really well.
Dude, honestly, thank you for sharing that. Because again, it's like, I hear that and maybe some listeners are like, dude, must be nice. Like that feels so far away. But I love having this like open-minded, hearing other people's stories, all that, because it's like, that's really wild to hear that. Like, that's pretty crazy when you're like, yeah, I did the math and it ended up being 40%. Like that's enough of a number where I'm like, well, shoot, maybe I ought to start doing my homework a little earlier and take that more seriously. And I think that's coming from you.
I evangelize this to people. Like, I know it's work. But I always say it's your future. It's not anybody else's future. Like it's your future. Like, so doing the work is like really valuable for you. But, I also hate going to the gym. So it's like, I get it. But like in my course that I made, like I talk about, it's where I kind of talk about and show if you can make this percentage, you'll do so much better. That's why you need to actually take the time and educate yourself on investing. And obviously I talk about that and I give all the basic breakdowns of the kinds of investments you can do generally as an individual and talk about, the difference you can expect in return. And once you kind of like start thinking about it, I like to think that once people get their head in it, they start to get intrigued and then they do a little bit of calculator math and they're like, wow, 7% and 15%. The difference is it's just off the charts, man. I need 15%. Yeah. You don't need a bunch of money in the bank to get motivated and learn, I mean, this is, you're just because you don't have money in the bank now doesn't really matter. It's like you got to get educated and then you got to know what you're going to do with your money once you get it. You know what I mean? Once you keep focusing on offense and improving your savings and all that, and you're like, all right, before you know, you're like, all right, I got 10 grand, I got 20 grand. All right, now what am I going to do with it? Like, what kind of, I need a good return. Like I did all this research. All right, I'm going to give it a go. And I always say to people, dude, it's when you have nothing and all you have is a fucking bank account and a car payment and a student loan, like tracking your finances is so easy. Like it literally takes you like 10 minutes, but it's a good time to get that habit going because you're like, all right, it's easy. All right. And then you're like, then you add like, this, you buy a house, put that in there and you're like, oh, I see how it works. I see how the amortization works. And I see how every time I make my payment, I actually am saving money while I'm making my housing payment. I get that now, Before you know it, like my Quicken was just like, had all this real estate. It was like this crazy thing. And you get your brokerage accounts and I got my crypto in there. And it's just like, I've been using the same Quicken file for 4 years. I could tell you what I spent on laundry in 1999 if you wanted.
That's crazy. Getting that early start and like when you build that foundation, it really is that valuable because it's like you've got time on me. So it's like it's almost like if I were to ask you like if you could go back in time and do one thing or like what's your message, like that's what you're doing right now. And I find that very admirable. Another thing that I kind of like, you sparked this thought in my head that it's kind of sick to think about, But it's like now here you are retired in this game, Play Louder. Now you've figured out
I like to say semi-retired to be,
all right, all right,
just
fine.
to be
I mean,
frank,
yeah, like you stay working.
I do work part-time,
Yeah, you stay working. I think that people now in this generation have an advantage that maybe they don't even realize. Is like your joke of email box money. It doesn't have to just be a course. I think in order to do the course thing, you kind of got to like master the thing first. I can always kind of smell the BS when it's like somebody makes a course and I'm like, bro, you're 21. Like, what is this?
It's a course on using the course platform.
Right?
On how to make a course.
I mean, hey, don't get me wrong, though. There are a couple 21-year-olds that have mastered some things where I would love to know. But I think that there's other ways of having email box money or digital assets. Like every artist I talk to, it's like your songs, your music, like getting that monthly check off of a DistroKid platform or something like that is so cool. Like content creators, people that have made any type of money off of YouTube or having your own intellectual property online that you get paid for, even writing a blog. Like, I guess that it's a little bit different. It's not as lucrative as it once was, but like all these things, I think, is another cool thing. And I'm curious, here's a hot take or a thought that I'm genuinely curious of what your thought is. So say you do aspire to be like, all right, fuck it. Like I'm going to buy a house early, but I got to get there. That early foundation, that 1 to 5K, whatever, this is a thought that I have, and I talk about this a little bit, but investing in yourself, I think, can sometimes be immensely valuable because if you need $1,000 to $5,000 of gear to start recording your music, or if you need that to start selling some merchandise for a project that already has legs, that might get you a return that's much better than a conservative S&P investment. And it's like, if you can't get the house out the rip, I think that sometimes people sleep on just how valuable that initial investment in yourself is, especially if there's a clear path to a digital asset or something is making yourself a product or a service. What do you think about that?
I 100% agree. I mean, I part of one of the things I talk about on my website, one of my pillars to success is entrepreneurship. It also kind of goes back to being on offense, especially when you're young in terms of making money. So I think owning a business, being entrepreneurial is really key to being pretty successful. And you can do that in a regular job too. If you have a plan that and you're not half-assed about it, you know what I mean? Like you think to yourself, okay, I see the path to this making money.
Yep.
I put some pen to paper. I know how much I'm going to charge for it. I know how I'm going to market it. I like literally have done the homework.
Yeah.
And I feel confident about it. Then yes, I would take money and I would invest it in yourself and start a business. And that's what you're doing. Whether it might be a small scale, you're starting a business. I discourage you if you're just going to be like, oh yeah, I got this plan. I'm going to sell my music. So that's a good excuse for me to not save for the house. And I'm going to go buy a $2,000 guitar and like whatever. But you've done no homework whatsoever on how challenging it might be.
Yeah,
there is a difference. And that's, again, going back to like treating your life as a business. Your business is your life when you own a business. Like it's all kind of one thing. You do a business because you want to improve your life and like do your passion, right? So it's all connected. And if you're going to like take your small savings and invest it, in yourself to do a business, do the homework first, do that spreadsheet, like take the weekend, that's all it takes, and be like, okay, this is exactly how I'm going to do it. I've mapped it out step by step. I've talked to people that have done it. I know what kind of marketing I have to do. I know this, that, or the other. And, you have a plan to like stay focused. You keep yourself accountable. I'm going to produce this much content on a regular basis. So like, I don't fall behind. Like you really take it seriously. Then yes, 100%.
Yeah, that's sick. Because I think about that. And it's like, if you were to be like an illustrator or something like that, right? Like you draw and you build a following and you master like promoting yourself on social, right? You do the right hashtags on IG, you get in the right algorithm for TikTok, and you kind of get a following. People, it's like, oh yeah, I know them. There's this great illustrator. Well, it's like then if you have $1,000 set aside, it's like an Etsy store. So then you start like an Etsy store and you just need the money for those initial prints. But it's like that $1,000, like, I don't know, like prints, like even at $10, right? That gets you 100 prints. You sell those for like $50, like that's $5,000, right? Did I just do that math right?
Yep.
I think I did.
Sounds about right. Yep.
All of a sudden, like that's a way better investment, like turning $1,000 into $5,000 off of your own art and prints, and like giving art to the world all of a sudden feels a whole lot more meaningful than like, oh, hope I win S&P 500. Like,
yeah,
that to me is like, maybe that's an encouraging way to start thinking about like the base, to then be like, oh shit, all right, cool. I've made my tiny little nest egg. Now that thing can get me a house, or it can get me like more, like deeper.
And I mean, doing that math, I think, is just really important, because you might find too that you're like, you do a little napkin math and you're like, oh, that could be great. And then you're like, wow, but I got to figure out how to sell the 100 prints, and I got to like house them. I got to whatever, what I mean? I got to ship them. I got to, maybe really work it out. And you're like, maybe it doesn't. Maybe there's a better way to do it. Maybe digital prints is better, and doing an NFT collection would be the better way to go. Actually, I would say 100%, if you have a social following and you're an artist, you should be doing NFTs, like hands down, like no question about it. Like get going. They're in the toilet right now, but like it will all be coming back, Every artist, I think, frankly, I mean, musical artists should be working on an NFT collection, in my opinion. The art is the thing you're buying and selling. Now, to me, it is like, I'd rather have art that's on my wall, right? And it's kind of funny. One of my clients, they have a big social media following, and they have a really pretty good known brand and done a lot of apparel sales. They're doing their NFT collection, actually, and they already did one, not under their normal brand, just like a starter one to like get their feet wet and like figure it out. And they gave me one, and I'm just like, and people were buying them, and they actually did really well with this it's called Trippy Toads collection. And he gave me one. He's like, oh, I'm going to buy one. And he's like, oh, don't buy one. I'll send you one. And he just put it in my MetaMask wallet. And I was like, well, it's great, but like, it's just sitting in my MetaMask wallet. Like, so what I did is I had it printed out and framed. I have it on my wall, and I'll send you, actually, you can put it in the show notes. And I sent it to the dude, and I was like, I guess I'm old fashioned, but like, I think it looks way better on my wall than it does sitting in my like, invisible fucking MetaMask wallet. Yeah. So I think where you're going to see a lot of that play out and is in the metaverse. Like, as we really move more towards, and it's sad, but I think it's really the truth, and it's coming. You're going to have your metaverse house, and you're going to hang your NFT JPEGs in your metaverse house. And that's where a lot of this stuff is going to be. And like, NFTs in gaming are probably the two industries, using cryptocurrency blockchain technology that actually make money already. They're profitable businesses for the people who make them, and they really go hand in hand. And it's like, you're going to be able to buy your metaverse house, your digital house in your weird metaverse neighborhood, and you're going to actually pay money for it using cryptocurrency, and your ownership of it is going to be recorded on the blockchain. I know I have a really dystopian version of the future, sadly. Yeah. Mainly because one of the films we produced was a documentary about this futurist Ray Kurzweil. Actually, all your musician friends should know Kurzweil keyboards. Are you familiar with Kurzweil keyboards?
No, I'm a phony.
It's definitely like a musician's, brand of instrument. The guy who invented that, like Ray Kurzweil, he's like a futurist, and he's written a bunch of books on how, we're going to eventually transcend our biology and live as long as we want. And so we did this whole documentary about this topic. It's called Transcendent Man. You can go get it on Vimeo or wherever else, any platform, if you want to watch it. It's really good, actually. But we made it 10 years ago. It got me like in tune to like what the future might be, and it's like not really my thing, but
you've come to accept it.
Yeah, Ray thinks we're all essentially going to live on the web. We're gonna shed our biological bodies and essentially all live, in the metaverse eventually. And my feeling is and if you think about like how expensive housing is, and like sometimes when I look at statistics about like, income growth over the years, it can be kind of negative. And I'm thinking, what's going to end up happening is like we're all going to basically like just have body pods. So like our apartment is going to be just a small box, and you sit in your body pod, and then you go live your life basically in the Matrix, or what we call the metaverse now. And your JPEG, your NFT JPEG is going to be on the wall, and your NFT song is going to be playing on your stereo, and you're going to be sitting in your NFT, blockchain purchased real estate, and that's going to be life.
Have you seen Ready Player One?
No, I haven't yet.
Oh, just go watch it. But
do I have to watch it?
Yeah, that happens a little bit. Like there's very strong elements of them illustrating that. It's so funny too, because like I'm the young one here, and I'm like, I don't know about this, Joe. I'm not ready. Like you're like, get ready for the future, fucker.
It's frightening, man. But what also is going to happen, I'm going way off topic here, is but we are getting replaced with automation. I don't know if you've picked up on that at all. Like literally we had my kid's 7th birthday party at the bowling alley, and a robot brought the pizza over.
Oh no.
And yeah, and I mean, we were like, the kids thought it was the best. I mean, it was cool, but in my mind, I'm just saying, wow, all staff will be replaced by robots, and then what are we going to do for money? So you're going to get your universal basic income, and you're going to get your body pod, and it's probably going to look, it's going to be in some sort of self-storage. It's going to be in some sort of self-storage place. And then you're going to go to your metaverse, abode, and look at your JPEGs.
I'm not ready, Joe. This was supposed to be this positive, exciting, like build a foundation. And you're like, you can build the foundation, but you're going to live in a pod.
You might make your first your first home be a metaverse home. Is basically what I'm saying. You could buy your first home probably for like $50 right now in the metaverse.
This just took such a wild turn. Shit. I'm over here and I'm like, if you're an illustrator, sell your stuff on Etsy. And he's like, or you can make it digital and get ready to furnish your digital. Anyway. Did I miss anything? Like I just wanted to tap back in with you. Really, I feel like we always have positive conversations, and I think your outlook and wisdom on personal finance and financial independence is always one that I welcome, because you've got more years in the game, and I like to pay attention to these things, and hopefully your wisdom and our conversation can inspire others. But I mean, obviously, like by now, if you haven't, like we've talked a lot about Play Louder, like go give that a read, see if it's of interest to you, and there's a deep dive available there for a listener.
I mean, go to my website, check it out. It's all there for free. But if you want a quicker, more distilled version, the kind of starter course, I feel like, is the Financial Independence Roadmap. That's one I kind of sold most of, honestly, and it's a good basic life foundation one. Yeah. And then the other ones are about starting a business, and then also about investing in real estate. So together they're kind of almost like a little bit of a life program, I guess. Sure. I don't know.
Does the investing in real estate one include metaverse real estate yet, or are you still?
I got to do a module on metaverse. I don't know enough about it. Truth is, there are people out there buying, investors trying to buy up metaverse real estate. No question. No, 100%. I mean,
it's crazy. You got to do a module on how to select your pod that you live in, and then how to select your metaverse real estate.
Yeah, that's first it'll be a body. Right? Get the right model body pod. Make sure you're going to be comfortable in there. Get a little mini bar in there, something like that.
That's right. And then choose a city with Google Fiber, right? Now all of a sudden climate doesn't matter, and you just find the city with the best internet.
You want a solid internet connection, because you don't want to be stuck in your body pod and like lose your link to your metaverse house, because then you'll just be like, God, this sucks. I love my metaverse house. I will say, maybe this is a positive note, but like for your younger listeners, even where I'm at now, which I'm happy about, I'm kind of psyched about. When I was 27, I still had about $50,000 of debt. Like I paid for my own school. I racked up debt to a grand total of $72,000 before it actually turned around.
Wow!
And the vast majority of my like net worth was saved in my 30s, and specifically between 35 and 43. Like,
no way.
It takes off. You know, it's real slow at the beginning. It's just like compounding. You know what I mean? Like, you put that $1,000 in there, and honestly, you fall asleep like watching that grow to like $1,500. You know, the compounding starts to take off. You know, halfway through. You know, and even for your income, that's true. For being able to invest in more, that's true. But buying that house, like forcing my way into that house, like I bought the house before I paid off all my debt. I was like, I'm not gonna fucking pay off all my credit cards if I can use the money to buy this house. That actually helped me get out of debt because the house appreciated, and then I refinanced the debt with the home equity line of credit, and I made my interest tax deductible. Real estate can do that kind of interesting stuff, like good financial wizardry for you. So that's why I always recommend to people, like, make it your number one priority. But again, if you're super pumped on your passion and want to make a business out of it, and you've done a good business plan, which is just a spreadsheet, definitely do that as well.
What a great way to conclude, though. That's really positive and affirming, because again, I try to have the empathy, and speaking from myself as well, it's like, it feels hopeless at times in the 20s and the 30s to feel like you're going to get ahead. So for you to share that and to be like, no, like early on, I found Quicken. I started tracking all my expenses. I started tracking all of my income, all of that. But still, it wasn't until the mid 30s that things really shifted. Like, that's actually really encouraging to hear. And it's like a very good note on just staying the course and staying patient and determined. So I'm so glad you just shared
when I started doing the Quicken, all I was doing was tallying up more and more debt every year. That's all Quicken was telling me, you know? And I was like, it was very discouraging, but it's also like, fuck. Yeah. I got to figure this out, because it's getting, you know, and, you know, eventually got some breaks, and, you know, really focused on getting a better paying job and doing more freelance work and side hustling and all that. And, you know, but it's not easy. Life's not easy always, but it's fun. It's always fun.
Dude, I love that. Well, dude, thank you. Thank you so much.